अब हम लोग जो सितंबर 2025 में टैक्सेशन का पेपर हुआ था उसके मल्टीपल चॉइस क्वेश्चंस डिस्कस कर रहे हैं. वी आर डिस्कसिंग व्हाट द एमसीक्यूज ऑफ द टैक्सेशन पेपर विच वाज हेल्ड इन सितंबर 2025. पहला केस सिनेरियो देखिए. सुदीप्तो is a resident individual. He is himself a resident individual, aged 54 years. 54 years age, gifted shares of an Indian company listed on recognized stock exchange in India to his friend Shanu. Now what he has done is he has gifted the shares to his friend Shanu to help him financially on 1st of April 2024. He has gifted those shares. The gift deed states that the shares will be transferred back to Sudipto in event of death of Shanu. Now basically what we have discussed is, in case if any person is making transfer of any asset and if it is made by way of trust which is not revocable during the lifetime of the beneficiary, or in case if it is made to any other person which is not revocable during his lifetime, that is of the transferee. In that particular circumstance, that transfer will be regarded as an irrevocable transfer. Though he has a right to revoke, इसका अधिकार है रिवोक करने का, पर ये कब आएगा? जब उसकी डेथ हो जाएगी तो ये ट्रांसफर क्या माना जाएगा? इररिवोकेबल ट्रांसफर माना जाएगा. हमने पढ़ा था कि जो भी रिवोकेबल ट्रांसफर से इनकम होती है वो इनकम क्या होती है? असेसी की इनकम में इंक्लूड हो जाती है. ये ट्रांसफर क्या है? इररिवोकेबल है. अब देखिए, द फेयर मार्केट वैल्यू ऑफ द शेयर्स ऑन द डेट ऑफ ट्रांसफर वाज ₹54 lakhs. ठीक है, वो गिफ्ट करता है तो वैसे भी ट्रांसफर की एम्बिट में नहीं आता. देन शानू रिसीव्ड अ डिविडेंड, ग्रॉस डिविडेंड ऑफ ₹4,50,000 ऑन दीज शेयर्स ड्यूरिंग द फाइनेंशियल ईयर. अब चूंकि ये ट्रांसफर इररिवोकेबल है, तो क्लबिंग प्रोविजंस विल नॉट बी अट्रैक्टेड. रिवोकेबल होता तो क्लबिंग प्रोविजंस अट्रैक्ट होते. हियर क्लबिंग प्रोविजंस विल नॉट बी अट्रैक्टेड बिकॉज द ट्रांसफर इज इररिवोकेबल. देन नेक्स्ट देखिए आगे. सुदीप्तो इज एंगेज इन बिजनेस ऑफ रिटेल ट्रेड एज अ प्रोप्राइटर एंड ड्यूरिंग द फाइनेंशियल ईयर 21-22 he paid 25,000 per month to his wife Swati as salary, being marketing in charge. So it is what remuneration which is given to a spouse from a concern in which individual has substantial interest. Then Swati does not possess any professional qualification or experience for this job. So this remuneration will be clubbed in hands of Sudipto. This income was clubbed in the hands of Sudipto as per the clubbing provisions of financial year 21-22. Then Swati started her MBA studies and did not get any salary from 1st of April 22 to 1st of December 24. Then she completed her MBA marketing course on 1st of December and again joined her husband's business and started getting a salary of 55,000 per month as salary, which is as per the market norms. Now the spouse possesses professional qualification, then here, and remuneration is also as per the market norms. So here clubbing provisions will not be attracted. This salary cannot be clubbed in hands of Mr. Sudipto. Then during the financial year 24-25, Sudipto paid 54,000 as medical insurance premium by way of account pay check for his senior citizen parents who are say non-residents. Now basically in the Income Tax Act, who is a senior citizen, who is a resident individual, who has attained the age of 60 years or more. So one time they are stating that they are senior citizen, but they are non-residents. That means what? They won't be getting the benefit of say higher deduction under 80D on account of senior citizen. They will be getting only a deduction to the tune of what? 25,000 rupees, which is eligible for a normal person, because he is still is a father. They are still their parents. Therefore, whether parent is a senior citizen or whether parent is not a senior citizen doesn't matter. Here, if he is a senior citizen, the threshold limit of 50,000 will be there. Otherwise, it would be what? Rupees 25,000. So here, deduction under section 80D will be restricted to rupees 25,000. Now they are asking, based on the above facts of the above, following multiple choice questions. Number 1 is, which of the following statement is correct as far as clubbing of salary of Swati for the financial year 24-25 is concerned? Here, the salary of Swati will be continued to be clubbed in hands of Sudipto. No, that is not correct, because now she possesses professional qualifications. So salary of Swati will be taxed in her own hands as she is, has acquired, say, required qualifications of the job. Therefore, it won't be clubbed. Here, clubbing won't be attracted. Then, salary of Swati will be taxed in hands of Sudipto as or Swati whose income is higher. That is not a case. Then, as a part of tax planning, Swati has option to decide in whose hands the salary will be taxable to minimize her tax liability. That is also not correct. Basically, here clubbing provisions will not be attracted because Swati possesses now the required professional qualifications. Now, one issue can be there that in 6412, what has been written is that once the income is clubbed in a particular, say in case of husband and wife, they are saying it will be clubbed in when both are in receipt of remuneration, then it will be clubbed in that individual whose income is greater, and subsequently also that will be clubbed. But here the thing is, here the clubbing provisions will be not attracted because it is not such income. Basically, now the income which is accruing or arising to Swati is on account of her professional qualification, knowledge and experience. Therefore, this income cannot be clubbed. Therefore, under 6412 itself a proviso has been created. That means what? Clubbing provisions in this particular assessment year won't be applicable because she is what? Earning this remuneration on account of her professional qualification. Then next is what? What is the amount of deduction under 80D in hands of Sudipto, assuming that he has opted out of default tax regime. So they will be getting a deduction of, say, rupees 25,000 here, because still his father is there, though he is an NR, but he is still father. Therefore, they will be getting a deduction of 25,000. Enhanced deduction of 50,000 won't be available because father is not a senior citizen. Then assume other incomes of Sudipto and Shanu rupees 55 lakhs and 11 lakhs respectively. Which of the following statement is correct in this respect? Dividend income shall be clubbed in hands of Sudipto as this is a case of transfer of asset without, say, adequate consideration. That will not, this is not correct because it is an irrevocable transfer. It's not a revocable transfer. So basically, it will be the income of Shanu, as clubbing provisions will not be attracted here. Dividend income shall be taxable in hands of Shanu itself, as clubbing provisions are not applicable in this case. Then dividend income will be taxable in hands of Sudipto, as his income other than dividend is higher than that of Shanu. That is not the case, and dividend income is exempt from taxation. That is totally wrong. So fundamentally what is happening here is, because the transfer is made in such a way that is not revocable during the lifetime of the transferee, it is regarded as an irrevocable transfer, and income arising of revocable transfer can only be clubbed. Therefore, it is an irrevocable transfer. Therefore, here the income won't be clubbed. Then next question is, AP and Sons HUF is controlled by Amrendra, the Karta of Hindu undivided family. Now basically, relating to HUF residential status, we see what the control and management. If control and management of the business affairs is, say, wholly or partly in India, then in that particular circumstance, HUF is said to be what? Resident in India. In that case, HUF is said to be resident in India. Okay. Then this resident HUF can become NOR if the Karta satisfies any of the two any one of the two additional conditions, that is what, he may be non-resident in 9 out of 10 years preceding the previous year, or he is in India for 729 days or less during 7 years preceding the previous year. Now what has happened here is, during the financial year 24-25, Karta has visited India for 190 days and managed the affairs. So here the affairs are managed in India. Basically HUF becomes, say, either wholly or partly managed in India, then HUF becomes resident in India. Then if the Karta, let us see whether Karta satisfies the additional conditions. 1 out of 2, if he satisfies any of the additional conditions, then HUF will become what? Not ordinarily resident. So basically during the immediately preceding 5 years, he has visited India for 70 days each. 70 into 5, that means what? He is in India for 350 days during the preceding 5 years. And prior to that, he was in India for 185 days every year. 185 days every year. So into 2 days. So for 7 years we have to count 185 into 2, that is 370. So here 350 plus 370 is equal to 720. So basically Karta is satisfying one of the additional conditions, therefore he becomes a not ordinary resident as he is in India for 729 days or less during 7 years preceding the previous year for being an NOR. Therefore Karta is now a not ordinarily resident. HUF will become resident but not ordinarily resident. So they are asking the residential status of AP and Sons HUF for the assessment year 25-26 will be what? So here resident and ordinary resident, because Karta of HUF is resident and ordinary resident, is not correct. Non-resident, because Karta of HUF is non-resident, that is also not correct. Not non-resident because control and management of its affairs is partly managed from outside India, that is also not correct. Then resident because control and management of its affairs is partly managed from India, and not ordinarily resident because the status of Karta is resident but not ordinary resident. So it will be resident, HUF will be resident but not ordinarily resident. So answer will be D in this case. Answer will become D. Answer is D in this particular case. Next question is, Ravi, an Indian resident, brought an overseas tour package from Karthik, also a resident Indian, and a seller of OTPP, and paid 7 lakh as cost. So he has brought this overseas tour program package. Basically OTPP, as you are aware, that is of relating to tax collection at source, and in relation to OTPP, now the enhanced threshold limit is 10 lakhs. Up to 10 lakhs it is 5%, and beyond 10 lakhs it's 20%. But it is for your year, it was up to 7 lakh, it was 5%. This much amount of tax was required to be collected at source, 35,000 rupees here. Then he has also remitted 12 lakhs under to USA under LRS scheme. Under LRS scheme, 12 lakhs have been remitted. Okay, for the purpose of investment in USA share market via Jones, a resident authorized dealer. So here 7 lakh was the threshold limit, and beyond that on 5 lakh rupees, since it is not for any education etc., tax will be required to be collected source at rate of 20%. So it will be 1 lakh. So they are asking the aggregate amount of tax which is required to be collected at source. It will be what? 1 lakh plus 35,000. 1 lakh 35,000 will be the amount of TCS which will be required to be collected. Now next question is, Renu, a resident individual, aged 48 years, owns 2 flats. Renu owns, say, 2 flats. She owns what? 2 flats. Two flats, A and B, in Hyderabad. She lives in flat A, that is self-occupied, for her residence, and gave flat B to her in-laws for their residential purposes. Now flat B has been given to in-laws for a residential purposes. Remember what they are stating for getting the benefit of 23(2) for being a self-occupied property, to self-occupied property that must be occupied by them for her own residence. Now what has happened here is flat A is occupied by her for a residence, but flat B has been given for in-laws for their residential purposes. That cannot be said to be occupied by her for her own residence. If we go for a strict meaning of the law, it is not occupied by her, it is occupied by for in-laws for their residential purposes. It is not self-occupied by her. She did not charge any rent from them. That doesn't matter if you are not charging any rent, but still not occupied by you. In the month of April 2024, she has entered into an agreement to buy flat C from a builder in the same area as of other flats are situated. In month of September 24, she took the possession of flat C and spent weekends there after paying a token of 11,000 to the builder. Now this flat is basically say self-occupied. However, flat C is not registered in her name. This flat C is not registered in her name. She is spending for her own. Now this flat is not registered, but even she will be regarded as what? Deemed owner in respect of that flat. She is spending for her own residence here. However, the flat C is still not registered in her name. All three flats are identical and size in other aspects. Now, she has one more flat D, which has been let out at a monthly rent of 45,000 to Mr. Shubh during financial year 21-22, that is 21-22, and Shubh did not pay rent for 3 months. But Renu has sold the flat on 31st of March 24. Now she owned 5,000 shares of PQR Company Limited, listed on recognized stock exchange, an Indian company, which were acquired on 1st of February 22 for 180 per share, and on 1/1/25 the company bought back 2,000 shares from her and paid 420 per share to Renu. Now whatever amount is received on buyback of shares, 420 into how many shares were there? 5,000. This much amount will be regarded as deemed dividend under section 222F. That will be regarded as deemed dividend under 222F. Okay. So 2,000 have been bought back. That will be regarded as what? Deemed dividend under 222F. Beside this, the full value for computing the capital gains, full value of consideration on account of buyback will be taken as nil. Less whatever cost of acquisition will be there, that will be reduced because indexation benefit is not available now while computing the long-term capital gains also. The cost of action of these 2,000 shares would be, that will be regarded as loss. That will be regarded long-term capital loss, which can be carried forward to be set off from long-term capital gains. Now they are asking you the questions. Based on the above facts, answer the following multiple choice questions 6 to 8 they are saying. Assume Shubh pays arrears of rent to Renu on 28th of June 2024 and she has a treatment of the rent received if she has spent 5,000 for collection. How much arrears of rent it was? $45,000 per month into 3. Arrears of rent is 45,000 into 3, 135. 30% will be allowed as deduction from the same, and balance income will be chargeable to tax. 40,500 will be the deduction and balance income will be chargeable to tax. 94,500 would be taxable in hands of Renu as income from the house property for financial year 24-25, even if she is not the owner, is the correct answer here. Then, which of the following statement is correct as to the tax liability on buyback of shares by PQR Limited is concerned? Now here, 8,40,000 would be regarded as deemed dividend in hands of Renu. So it is 2,000 into 420 into 2,000. 840 will be regarded as deemed dividend. This is correct. PQR Limited will be liable to pay 195,686 as additional income tax. 115 QA provisions are not applicable now. 480 will be treated as long-term capital gains in hands of Renu. Now here it is a loss, basically it won't be gains. And 480 will be regarded as deemed dividend in hands of Renu. That is not correct. 2,000 into 420 is deemed dividend. Balance is what? Loss. This is 2,000 into 180, that is loss, long-term capital loss, which will be allowed to be carried forward and set off from capital gains, if any. So this we are question number 7. Then which of the following statement is correct as to taxability of income from house property? Now here, any two flats of our choice will be treated as self-occupied, whereas third flat will be regarded as deemed to be let out. One flat of our choice will be treated as self-occupied, whereas other two flats will be treated as deemed to be let out. And flat A as self-occupied, flat B will be deemed to be let out, and flat C will have not impact on our income as flat is not registered in its norm. This is also not correct. Basically, the option must be they are treating that all the flats are self. Then the most appropriate answer is this only. Otherwise, when it is not occupied, second flat is not occupied by her for her own residence. First and third flat can be regarded as self-occupied. Second must be basically deemed to be let out. That is a correct answer. But here they are saying that any two flats of a choice will be regarded as self-occupied. First and third basically are self-occupied by her. Second flat has been, say, given to their parents. It's not regarded as self-occupied but by the assessee himself. Then they say all three flats will be self-occupied. That is not correct. Only two flats can be self-occupied. So this was about our discussion relating to the case studies relating to taxation part. Now next, let's discuss about the GST portion. Raghu Impacts Limited. Raghu Impacts Limited, registered in state of UP, was involved in supplying stationery items on pan-India basis. All India they are supplying. The company did not opt for the registration. They went out for GST registration. Now, proper officer of the GST based on inquiry finds that the company is liable for registration and registers it on a temporary basis on, say, 21st of January 2023. Now here, if any temporary registration has been granted, then within a period of 90 days from the grant of this temporary registration, we have to make an application for registration in the prescribed form. So 90 days time frame is there where you have to file an application. Otherwise, in case you are not satisfied with the order relating to temporary registration, then we can go in appeal also, and then if the appellate authority decides that you have to get yourself registered, then within a period of, say, 30 days from the date of issuing the order upholding the liability of registration, you have to make an application for registration in that particular circumstance. Okay. Now here the company has made the following outward supplies of printing materials in the month of February 25. In Telangana state, Agriculture Department for an invoice of rupees 2,60,400 inclusive of GST. You know, they are in Uttar Pradesh. They are giving to Telangana State Agriculture Department for an invoice of value of 260,400 inclusive of GST at rate of 5%, delivering at Hyderabad, Telangana state. It's an interstate supply to government. Maybe they may be asking about TDS. Then in UP GST, State GST Department for invoice of 280 inclusive of GST at rate of 12%, delivering at Noida in the state of UP. And in to Delhi Transport Corporation, owned transport corporation registered in Union Territory of Delhi. This is in Delhi for supply to central stores located in Ghaziabad, that is in state of UP, for invoice value of rupees, this inclusive of GST at rate of 18%. So the company has made the following outward supplies in the month of February. In the month of September 2024, company found that while issuing invoice to customer, the company RNSC charged higher value, that is 52,000. Okay, such invoice was issued on 31st of March 2024. Company issues a credit note. They have charged a higher value and now they are issuing a credit note on 1st of October 2024, and company has filed the annual return on 15th of June 2025 and return for the month of September 24 and October 24. They were filed on 31st of October for September, and for October it was filed on 19th of November 2024 respectively. Now based on the facts of the given case scenario, choose the most appropriate answer for the following question number 9 to 11. In respect of printing material supplied in the month of February 25, the company was subjected to total GST TDS of this much account, ignoring bifurcation, they are saying, of the CGST and SGST. Now let us see here. Number one is they have given to Telangana State Agricultural Department for invoice 260,400. When the contract value exceeds 2,50,000, then only tax is required to be deducted at source. Let us see what is the contract value here. That is 260,400 into 100 divided by 105. 248. In this case, there will be no TDS because it is inclusive of GST. Then 280 into 100 divided by 112. That is 2,50,000. Here also the contract value does not exceed 2,50,000. TDS requirement will not be there. Then to Delhi Transport Corporation, that is government owned transport corporation registered in Delhi. Now here remember the location of recipient is where? It is in Delhi. You will be deducting tax at source. For supply to its CSD in Ghaziabad, UP. Okay. Now here, basically the location of recipient, that is the person who will be liable to deduct tax at source, is in Delhi. And here the supplier is where? Supplier is in UP. Place of supply is also where? Is in UP. Now here this person who is in Delhi cannot deduct what? Tax at source. of which state? Of the state of UP. Because it has been provided in TDS that the location of the recipient is in different state, and supplier and place of supply is in say different state, then in that particular circumstance tax cannot be say deducted at source, because you won't be able to deduct GST of Delhi to deposit the same. So therefore, in this case also TDS provisions won't be attracted here. Okay, because the supply is given where? In UP, and the recipient is in where? Is registered where? In Delhi. Therefore, so in this case, answer will become say nil here, though the contract may exceed 250, but it's they won't be able to deduct tax at source in this particular case. Next question is, what is the maximum timelines available for declaring details of the such GST credit note in GST return with respect to the said transaction? Okay. Now the details of the credit note which is issued is to be declared in the return for the month in which the credit note has been issued, but it cannot be it should not be later than what? 30th November following the financial year, or the date of furnishing of the annual return, which I say earlier. So here the details of the credit note, company has issued the credit note on 1st of October, and in that for the return for the month of October, basically the same has to be was issued. In September 24, they have found that the invoice is incorrect, and then company has issued a credit note on 1st of October, and the company has filed the return on 15th of June, and return for the month of October was furnished on 19/11. So it will be 19/11 or 15/6/25, which I say earlier. It cannot be later than 30th of November or 15/6/25. But the thing is here, since they have furnished the return of October when they have declared this in the credit note, issued a credit note, they have to give this details in the return of the month of October, which is furnished on what? 19th of 11, 2024. Okay. Then on getting temporary registration, Raghu need to apply up to within 90 days. So see, when the temporary registration was granted, it was granted on 21st of October. 21st of January. 2023. Within 90 days of the same. So 10 days is here for Jan. February, 28 days for Feb. Then March, 31 days for March. So Jan, Feb, March and April. Up to 21st of April. They have to go for what? Deregistration. That is 90 days. Jan, Feb, March and April. Next is Neelanchal Chamber of Commerce organized a business summit. Safal Private Limited, a registered manufacturer of a ready-made garment, sponsored the summit and paid a sponsorship fees of 150. Sponsorship services are provided by whom? It has been provided by Neelanchal Chamber of Commerce, which is other than a body corporate, and services are received by whom? a body corporate. Body corporate which is located where? In the taxable territory. Here the same will be covered under reverse charge mechanism, and the body corporate located in taxable territory, that is Safal Private Limited, who has received the services, will pay GST under RCM. In case if a body corporate provides sponsorship services to another body corporate in that particular circumstance, the reverse charge mechanism won't be applicable here. So here in this case it is covered under RCM. And Measures Godbole is an independent director of Safal Private Limited, provided taxable services worth 40,000 to Safal Private Limited in capacity of director in this regard. Since the in capacity of director it has been provided, it will also be chargeable to tax under RCM. So here the total value of Safal Private Limited liable to pay GST will be what? 1,90,000. Both will be covered under, say, reverse charge mechanism. Then next is Anant is an unregistered person. Anant is an unregistered person, rented his commercial building to Measures ABC and Company, a registered partnership firm under GST in the state of Tamil Nadu. Okay. For the month of, this is covered under reverse charge mechanism, renting of commercial building. Unregistered person is supplying to a registered partnership firm. The firm for the month of November 2024, the firm paid rent by NEFT on 29th of November. They paid rent on 29th of November 2024. Whereas the invoice was issued by Mr. Anant in advance on 25th of November 2024. They issued the invoice on 25th of November 24. The time of supply for the purpose of payment of GST for the above transaction will be if payment is entered in the books of accounts of firm on, say, 29th of November. Now this is basically covered under reverse charge mechanism, and here the time of supply will be what? The date when the payment has been debited from his bank account, or when the same has been entered in his books of accounts of the recipient, or 61st day from the date of invoice. Now the payment has been debited from the bank account on 29th of November, as well as what? The same has been what? Entered in the books of accounts on 29th of November. And 61st day from date of invoice is much later. Therefore, time of supply will be what? 29th of November 24. Now let us discuss the last case scenario 4. Mahadev Housing Society. It's a housing society registered in GST, Lucknow, Uttar Pradesh. The society has in all 200 flats and 20 shops. Okay. There are 3 BHK flats, 50, 4 BHK flats, 50, 3 BHK flats, 50, 4 BHK flats, 50, then shops are there. The society received and paid the following amounts in the month of January. Now here, maintenance charges collected, including property tax of 1,000 from 3 BHK flat and 1,500 from 4 BHK flat, was collected on behalf of the municipal corporation. Now here, what is the amount for each unit under 3 BHK flat? That is 8,000, and amount for each unit under 4 BHK flat is 10,000. So this is the maintenance charges. We have discussed what this property tax or other taxes which are collected from the flat owners. They will be deducted. While calculating, the exemption is there up to 7,500 rupees. That is exempt beyond 7,500 rupees per month. That is what? Chargeable to tax. So here this will be exempt. This will be exempt. But beyond 7,500, the amount would be taxable. This is 1,500 from 4 BHK flat. So it will be 8,500 they are collecting toward the value of the taxable supply. This 1500 is in capacity of a pure agent, we can say. Then maintenance charges collected from each shop is 7,000 during the month. It is only for residential unit. Exemption is for residential unit and not for commercial unit. It will not be for a commercial unit, remember. The thing is here, now interest 75,000 is of fixed deposits that will be coming under the ambit of exempt supply. Interest on fixed deposit is coming under the ambit of exempt supply. 4 generators costing 1 lakh were purchased from registered supplier for power backup of the blocks, of which 2 were installed in for 3 BHK blocks and 2 for 4 BHK blocks. And the amount is capitalized in the books of accounts and no depreciation has been charged. Now here, out of this, 2 were installed in 3 BHK flats blocks and 2 for 4 BHK blocks. 2 lakhs, and what is the rate of GST we can see on the same. Then pipes and other sanitary fittings costing 25,000 were purchased from block A from a registered supplier for block A. Block A, that is 3 BHK. Block A is exempt, coming under the ambit of exempt supply. And 3 members own 2 units flat, each type of 3 BHK type. That will also be exempt irrespective of number of units owned. Each flat will be regarded as a separate unit and will be entitled for exemption of 7,500. Then ignore effect of common credit, they are saying. Assume all the conditions for claiming ITC were complied with and not claimed any depreciation on the assets. Okay. Rate of GST they have said on 18%. Based on the case scenario given, choose the most appropriate answer here for the following questions. That is amount of ITC that is a society can avail for the month of January. Basically they have purchased here 1 lakh into 2 into 18% say GST is there. ITC will be what? This much amount of ITC will be admissible. So here they already told ignore the effect of common credit. This is basically 2 are exclusively for exempt and 2 are exclusively for what? Taxable. So the GST rate will be 99%. So 18,000 will be the amount of CGST and SGST credit that would be admissible here. Okay. Then the gross GST liability before reduction of ITC for the month of January is, now they are asking for the gross GST liability for the month of January. It will be 8,500. How many 4 BHK units were there? Into 100. That is 8,50,000. Relating to this shops, in case they are not owned by the, they are not the members of the, housing society, then they won't be getting the benefit of exemption because that is for residential society for common services. So we presume that it is not for, members, then whatever amount will be collected from them, that will also be liable to GST. So 7,000 and 20 shops are there. 7,000 and 20 shops are there, 140. This will give you 89,100 and 89,100, presuming that they are not what? The members. In case they are member, they may be resident welfare society. For then it can be taken, you can get the benefit. But still, since it is commercial in nature, I don't think so. They won't be entitled for getting the benefit of the exemption. And they are asking total value of exempt outward supply for the month of January. So whatever 3 BHK flats are there, that will be exempt. Value of exempt supply. 3 BHK flats, 7,000 into 100. It is 7 lakhs. That will be covered on the ambit of, say, exempt supply. Okay. And 75,000 also. So it is 7 lakh and 75,000. That will be covered under the ambit of exempt supply. हेलो हाँ हाँ पंडित जी नमस्ते हाँ हम अभी एक्चुअली में क्या थोड़ा 12